Good morning, ladies and gentlemen. We continue with our coverage of first quarter earnings, and we are now joined by the management of mid-sized software services provider KPIT Technologies, Mr. Sachin Tikekar, Joint MD and co-founder at KPIT, as also Ms. Priya Hardikar, CFO at KPIT Technologies, joins us live on the show. Good morning to you, ma'am, and to you, sir. A very warm welcome on Business Today Television. I'll first start with Priya. We have the numbers right there in front of you, ladies and gentlemen. It's been a strong 13% rise in first quarter sales year on year to 1,540 crores. Net profit has slipped 16% to 172 crores, although EBIT is up 3% at 295 crores. My question to you, Priya ji, is would you want to explain the rise in top line and a decrease in net profit? What caused both sides to move in opposite directions?
Yes, so there are two things, Shell. First is revenue. As you have mentioned, we have YOY 12.8% growth in the current quarter. If you look at the quarter on quarter growth, it is little bit of flattish. However, we are bullish about H2. Currency has played a major factor here in the current financial reporting for the quarter. Apart from that, we are happy to report stable 21% margin over last 4 quarters, and we do believe that in current quarters also the margin at 21% will be maintained. Now coming to PAT, that is profit after tax, yes, you do see a variance. It's a large variance, but the reason there is not the operating margins or anything operational. In the previous quarter, we had a significant and a major one-time or an extraordinary income recorded in the financial statements owing to our Corix JV. There were multiple things happened because of that. Besides that, in this current quarter, the currency fluctuations were, as you know, Euro and JPY have depreciated significantly, and that has impacted our other income, that is the hedging income. And that is why you will see that there is a drop or a variance in terms of previous quarter PAT to current quarter PAT. But I will reiterate that the EBITDA margin is the operational margin, which is 21%, and we continue to expect 21% going forward because of our operational levers, efficiency, and AI infused mobility solutions.
Okay. Now let's focus on new deal wins, the order flow, and the pipeline. Good morning to you, Sachin ji, once again. Would you want to comment on the order book as of now, new contracts that you've signed in the quarter gone by, and how does the deal flow look for the 9 months ahead?
Absolutely. First of all, thank you for having us again, Shail. It's always a pleasure. As far as the pipeline is concerned, it continues to be very robust. The deal closures last quarter were also quite good to our expectations. The thing that is happening is, on one hand, we are winning quite a bit, as reflected, in our pipeline. On the other hand, we are also changing the business from being mostly a services company to a solutions company. That means we'll have to use more of our platform tools and accelerators and products to help our clients get to the market faster at a lower cost with more reliability. So this is something that is playing out, and sometimes what it means is we not only cannibalize the business of our competitors, but even our own business in order to make this work. Given the pressures that all the automotive and mobility OEMs are facing, this is what we think is the best thing that we can do as their trusted partner. So in short, we are happy with the pipeline. We are happy with the closures. The uncertainty related to tariffs and the geopolitical things will continue for at least a quarter, but we expect them to settle down sometime soon. And that will sort of give us confidence about bringing growth back towards the end of this year, towards the end of H1 of this year. So that's what we can say about our revenue and pipeline. The bulk of the pipeline comes from our existing clients in passenger car, mostly in passenger cars. There are new green shoots. So we started working with trucks and off-highway, or doubling down on trucks and off-highway a couple of years ago. We've been able to start initial engagements with some of them. That's also something that has been baked in for this year. And then we are also hoping that what we are doing, India for India and China for China, will also start to pay out in terms of larger closures and growth towards the end of this financial year. A long answer, Shail, but I hope I've been able to provide some color to it.
Yeah, the color is wonderfully technicolor. I just wanted to understand the total order book as of now.
Our total order book is substantial. It's we had about $240 million of closures actually happening. That's the TCV. That means this is something that will get panned out over the next 6 to 8 quarters. So that's the order book that we have right now. And our effort would be to keep building on it, as we get deeper into Q2 and, as we get into the second half of this financial year.
Fair point. There was a transaction, Priya ji. You've purchased a company called Kerosoft. Would you want to discuss the deal size and how this is going to be EPS accretive, if at all, from the second quarter? How do you explain this deal and what you're looking forward to in this transaction?
So there are a couple of things.
Priya, please go ahead. Please go ahead. Yeah, all right. Thank you, Priya. So essentially, the reason why we decided to get into the partnership and potential acquisition of the services business of Kerosoft is to help our clients. There were 3 reasons. Number one, our clients are looking for cost reduction. The vehicle level cost reduction from vehicle design and engineering perspective. So that way we can not only help them reduce their cost on the software side and create more efficiency, but we can also help them save cost on vehicle design and engineering side. So this was one reason why this partnership looks complementary to what we are doing with our OEMs. Second reason is Kerosoft has been operating substantially in China, and it's really important for us to learn what's happening in China and apply those learnings for China as well as take them globally. And last but not the least, as we look at trucks and off-highway, we'll be getting some really marquee clients through this potential acquisition. So that was the logic behind, getting into signing the term sheet towards the acquisition with Kerosoft. Having said that, what we have to say is the conversations are still ongoing, and we know that they're definitely the agreement is not closed as we speak. Our hope is that before end of Q2, we are able to close the agreement, and then hopefully in Q3 we'll be able to, sometime in Q3 we'll be able to sort of integrate their business with ours. Your question was whether it could be profit margin accretive. The margins are healthy for Kerosoft as we look at them. So we believe that from day one, whenever the consolidation happens, they would be accretive.
Okay.
Yeah.
Let's get the lady who manages the numbers at KPIT Technologies to answer this one. Priya ji, how much are you paying? How are you raising these funds? And by when do you think this acquisition would be profitable?
Right. So 3 things. As we have already declared to the market after our board meeting in May, the current size that we have mentioned to the market has been up to $191 million for the size that was given in the outlook. However, as Mr. Tikekar mentioned, that we are still going under some closing condition, and the condition precedents are not closed, and so we believe that it will start getting consolidated from the current quarter, and Q3 is what we will start seeing the benefit. In terms of its funding proposition, I think we have explained that we have been able to negotiate the overall deal here at a very staggered manner, and therefore we will be able to fund this with our internal accruals. And if there is any marginal requirement in any specific quarter, that we can look at separately, but nothing really as a borrowing that we are looking for funding this deal particularly.
Okay.
In
So
terms of margin, yes.
please continue.
In terms of margins, as Mr. Tikekar mentioned, that from Q3 onwards, once the business starts getting integrated into KPIT, we will start seeing the results, especially on the cost part and the off highway and the commercial vehicle reach that we will get. So together with KPIT as well as Kerosoft, we do believe that this partnership will be a profitable one. Now we are focusing currently on closing conditions and how the deal will now come to closure. So that is what both the teams are working on presently.
Okay. Let's get Mr. Tekekar back into the conversation. Sachinji, can you now look at the globe and tell us the new clients that you are adding, the new geographies that you are addressing, and how are you sort of looking at Japan at this point of time?
I'm glad that you asked that question. It gives me an opportunity to actually lay out our strategy. So number one, let's go. There are three new markets. There are three markets that we've been investing in last 2 years, which we think will generate further business for us. Number one, Sweden. As you know, there are two large truck makers in Sweden and one large passenger car maker. We inaugurated our center there a few months ago. So we believe that we'll start to see some business coming from Sweden in the next few months. Number two, we've been looking at China for quite some time. And then there is a three-pronged strategy. How do we help our global clients to have business in China, to remain relevant in China? That's what we are doing currently in China for our global clients. Secondly, how do we work with Chinese clients and help them be successful in China, not only in China, but also globally? So that's the part for China, and we are making progress. It's taken us 2.5 years, but we wanted to make sure, given the finer nuances of the market, we wanted to make sure that we get the right model, and most importantly, we are actually able to make money, right? Create real value for the clients and actually make money, which is something that has not happened in case of many other players. So that's number two. And number three, as you know, from passenger car perspective or truck perspective, India is the fourth largest market now. And this is going to be a growing market if you take the next 5-year, 10-year view. So all the global OEMs are looking at India very seriously, more seriously than before. And secondly, there are the Indian OEMs who are also doing a tremendous job. And there are some new age OEMs that are suddenly emerging. So we believe that India for India will be a big focus for us going forward. So these are the three markets that we believe will sort of accelerate our growth as we get into the second half of the year, but more importantly in the next year. And we are quite optimistic about all these three markets.
Sachinji, your compatriot in Pune is on the verge of buying out a European truck maker. I know you understand what I am referring to. And yes, the commercial vehicle space in India will get bigger, better, and far, far larger than what it is today because of the highway network that we have, because of the growth that is now coming on this $4 trillion economy, and of course, the way logistics are shaping up. Now, let's look at the troubling parts of the software sector, which are two. This advent of artificial intelligence. I'd like you to speak on, Sachinji. What do you think is the short-term impact, and how do you think long-term companies such as yours will be benefited by a lower wage bill?
Let me address the second one first, which is, talk about in context of KPIT. As I mentioned, we are in the transition of being mostly a services company to a solutions and a product company. And what I mean by that is we have our own platform tools and accelerators that we have built. And the development and the speed of execution of that is complemented, supplemented by what we call AI infused mobility. So these are AI agents that we are building that are very, very automotive domain specific. That means we'll be able to accelerate the production programs of our clients to a large extent. We'll be able to do them at a lower cost to our clients, and hopefully we'll do this in a fairly safe manner because it's the vehicles on the road that we are actually talking about. So that's really the plan. What does that mean? So that's the primary area of focus. The second part is we've deployed agents in our corporate functions across marketing, legal, recruitment, HR, all of these functions. There is substantial use of AI agents that we have actually built. So this is something that KPIT is doing, and we believe that this is going to be an important part of our journey going forward. We are encouraging all our employees to embrace AI and become really, really proficient in AI. Those who make the transition will have a bright future, and those who don't embrace it will get left behind. So that's how KPIT looks at the emergence of AI and the application of AI for our company. The larger question is, what I would say is, I'm an optimist. So I think there is an opportunity for all of us to embrace AI and do things in that can actually help humanity, be it healthcare, be it clean energy, and many areas where we'll be able to do more with less. So that's the optimistic side of it. And as the proliferation of AI happens at large scale, there will be other things that will get created, right? Where there will be other opportunities in terms of jobs and so forth. So this is the optimistic side of myself. Let me give you the other part. While this transition happened, there will be some specific skills or specific areas that will have a larger impact, larger adverse impact, right? And that's the evolution, right, that we have seen of human beings over the last several 100 years, right? Any kind of automation comes in, the disruption is painful in localized area, but in general, it's usually beneficial. So that's really my personal take about AI. We remain optimistic, but we have to know what could be the potential downsides of it, and be very judicious about it so that it doesn't have negative impact on the mankind, so to speak.
Yes, I think, Sachinji, most of our understanding of AI is driven by Hollywood films, and we look at it with considerable, not exactly distaste, but pain. Let's see how it pans out. I am sure this was the same story 25 years ago when computers came in. They were supposed to replace humans. And what happened was the complete opposite. Newer, better, and far higher and excellent industries came up. I am sure that is exactly what is going to happen with artificial intelligence as well. Priyaji, coming to you,
Sure.
there was a decline in headcount by about 300 odd staff. You have a headcount of 12,545 now. Was this by design? Two, what is the level of attrition in Q1 gone by compared with the Q4 and Q1 of last year?
So, a couple of things. As Mr. Tikekar mentioned, we are now moving towards productized or platform-based solutions company instead of a pure play services company. So, what that means is we are distancing from the linkage between headcount and revenue. So in terms of how we deliver to our clients, basically it will move to outcome based projects or fixed price projects. If you look at our actual numbers, our fixed price projects has increased significantly. As a strategy, we are driving towards moving to this productized solutions company and not a services company. So clearly, when there is no linkage between the headcount and what we deliver to our clients, you will see that we will optimize what best works for our clients and for KPIT, keeping in mind our productivity. As Sachin mentioned, AI also plays a significant part. We have a two-pronged approach where what it can do for clients and what it can do for us. Having said that, considering both, obviously this is another reason why there will be no link between headcount and what we deliver to our clients. Now, lastly, about your question on how do you see panning out in future? I see that the link to this anyway will not be there, and we will continue to be stronger on our productized solution services to our clients. Hope this addresses.
Okay, Priyaji,
Yeah.
staying with
And
you.
just to say, yeah, I was just going to answer the question related to attrition. Our
Yeah, sure.
attrition is, it continues to remain in the high single digits. That has been the case for the last several quarters. That was true last quarter as well. And the reduction in the headcount that you see, essentially, it's due to the attrition. It's just that we have not hired as many people as one would have hired in a linear model of services, right? So that's really the change.
Okay. Coming back to you, Priyaji, any guidance that you would like to share on top line on net profit for the remaining 9 quarters?
No, at this point of time, we've already mentioned that we'll maintain our EBITDA margin at 21%. I think
Okay.
in current times and what we are going through, that itself is a significant milestone that we will achieve. We are very bullish about how we will basically improve the EPS for our shareholders and earnings per ratio for the shareholders. So I think EBITDA margin will remain our priority, and then that is what we think that the operating margins will continue.
Okay. I'll request the PCI to kindly share the stock performance data on KPIT. Sachinji, this one is coming to you. Now, just sit back and think. At this point of time, are you more hopeful about the Indian software industry as a whole compared with what you were 5 years ago?
I think I continue, like I said, I'm an optimist. I do think that there are significant opportunities given all the changes that are happening, whether they are geopolitical in nature or changes that are sort of driven by artificial intelligence. There are companies in India, there are startups who are doing some very interesting work in artificial intelligence. There are companies, in IT space that are also transforming themselves. And then there are companies like us in engineering services and solution space now that are also trying to, see something positive out of this and embrace the change and make the most out of it. So this is one part. Plus, India has a young population as compared to the rest of the world. As long as we continue to educate our people, I still think that the software industry in India will have a very bright future going forward. And even if you compare that to 5 years ago, that was our view. And, last 5 years have been pretty good, except for a little bit of a blip during COVID. We believe that, it's going to morph to a different avatar over the next 5 years. But net, I think it'll be a good thing for the country.
Fair point. And on this optimistic note, ladies and gentlemen, in front of you is the stock price performance of KPIT. It's been a fabulous wealth creator. For the moment, if you ignore the last 1 year, even then the returns have been fantastic. 5-year CAGR is 80% a year. You couldn't have had it better as far as prices are concerned. And as always, when things go up so fast, they also slip a bit. these are all knee-jerk reactions in the market. I'm sure they'll recover. With that, Sachinji and Priya, as always, it's such a pleasure listening to you about how things are changing in the world of automobiles. I believe a local customer has also signed up from India, that's the JSW Group. And let's hope that we work less and less while sitting behind the wheel, and everything is automated in the next 4 or 5 years as far as the vehicle is concerned. Thank you so much for your time.
Thank you.
Thank you again.
Thank you.
That, ladies and gentlemen, was Sachin Tikekar and Priya Hardikar from KPIT Technologies discussing their first quarter earnings which have just been announced, and of course the way forward. Please stay glued to Business Today Television. There's a lot that's happening on the channel on this very, very eventful day. The market most likely will see a shade of green today. The Nifty is now down just 67 points, all thanks to short covering.
कांग्रेस ने हमें